We'll go for it. Big and small and big. Okay. All right. Thank you, everyone. Thank you. Welcome to our third week of training. So I hope everybody had a fantastic Thanksgiving break. Hopefully you got to have some really good food and spend some time with your friends and family. All right. So tonight we're going to talk about deductions, adjustments, and credits, and general tax preparation of forms. So it's quite a bit of material we're going to cover. Our plan still next week is to take the foreign student test. So we'll all come here. We will not take it together. We will take it individually all at the same time. So it is not one joint test. We're going to take it all our own. The resident side, so we're going to do the first half of our session is going to be non-resident, of course. Second half will be residents. We're going to talk about credits, education benefits, finishing the return. And then next Wednesday, we're going to do the test. All right. So we're going to do resident on Wednesday, non-resident first on Tuesday. And if you get through everything there, you are done for the, you got to send your paperwork in, but you're done for the winter break. So go do finals, take a month off, enjoy it, and we'll get back again in January. So just a few more details about tonight. So we're going to do some updates in the Moodle review, then talk about all of our taxes plan and a little bit more homework, of course. All right, so first off, a 4011 update. So everybody that's here, I said last time, don't take the 4011s because I think there's a mistake. There was a mistake. Basically, the treaty table for scholarships, currently in the 4011, it's got a limit of 2 years on it, but that is not correct, or it's not like completely correct. Really, it's actually 2 years for business trainees or apprentices, but students have unlimited numbers of years. So if you look at the treaty benefit for wages on the next page or 2 pages ahead, you'll notice that says like unlimited. And then there's a little star that says 2 years for treaty benefits for business apprentices and trainees. That's what it should say for the scholarships as well. So if you have a paper 4011, there should be a sticker on the front that has an S something something number. That's the little sign that I've fixed it for you. If you're online, please know that that is a flaw. I'll probably put like a corrected version out on our Moodle Drive just so that we have the correct version there. But if you go download a version, know that it's not quite 100% correct. We'll report that to the IRS. Hopefully they'll get that fixed at some point here. All right, for the assignment, for everybody doing that. So thank you to everybody that has done it. I think I got through all of them that have been submitted as of lunchtime-ish today. If you haven't already done it, please go ahead and do that. I'm not going to review the answers here in our training today. When you do submit the assignment, I give you the answers as a PDF, and then I kind of go through your forms and let you know, kind of circle anything that's wrong, or give you a smiley face if it's all good. So the kind of the challenges that I've seen people have, the biggest one is the counting of days, and this is always a challenge. And the main thing to remember here is that we count both the entry and the exit date. So for example, if the total number of days was supposed to be 200, I'm seeing a lot of 199s or 198s. If you are using an Excel formula to do the math for you, you have to adjust the formula or adjust your date. So a little example here, entry date of 1/1, exit date of 12/31. If you just do an Excel, entry minus exit, that math gives you 364. It's because it's not counting that entry date. You're subtracting that entry date away. So you can either do exit minus entry plus 1, which is what I always do. You can also adjust the entry date if you want to. You just got to make sure you keep track of that so you don't look at that and then write that other adjusted date in on any of the forms. And then as a reminder for lines 9 and 10, so in that part 3, so line 9 is a school name, an address, and a phone number. And then line 10 is a person name, address, and a phone number. The phone number has been the tricky one with occasional misses on forgetting to put the school name as well. Okay. All right. Another tip for the Moodle dashboard. So Moodle's new for everybody this year. So I'm also learning how to best give good guidance on it. But we've had a few folks that think they are done or say, I don't see any assignments. If you're using the timeline, make sure you check what date range it's referring to, because I generally will assign things to have a target completion date of like today, Tuesday at 3 o'clock, or maybe Sunday at 5 p.m. or something like that. So if you're using the next 7 days, it's not going to show stuff that was supposed to be done previously. So if you select all, it'll show, for example, that you're very overdue on your standards of conduct quiz, like I am here. All right, so our awesome new Link and Learn site is still waiting to be awesome. It is very much non-awesome right now. It is sort of live, but it's not really live. There's a net listserv that I'm a part of that everybody's trying to get in to use it. There are lots and lots of problems in getting in. There are lots and lots of problems with trying to take the tests. Things are like timing out, or when you go backwards or forward, it doesn't register it. So I'm going to still continue to say we should hold off on it. They had said they were going to do it, launching it on 11/27. Now the current date is 12/1, which is Friday. So hopefully that will happen. We have 2 tests that we really need to do before the foreign student test. It's the standards of conduct and the intake interview. They're both 10-question, true, false, multiple choice tests. So they're really straightforward and simple. It'll be no problem for you guys to get through those when the system is live. If we get to something like Sunday or Monday and it's not live, we'll huddle about whether we want to go forward with the test with the system not being perfect or not. So hopefully all will be well here in a couple more days. And awesome. All right. With that, I'm going to do a really quick review of what we talked about last time. So we spent an incredible long time talking about income. So as a really brief summary, right? Only income is taxable for non-resident aliens is if it's US income, right? If it comes from somewhere outside of the United States, we pretend that it doesn't exist. We use la, 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 right? What happens in the US stays in the US. If you work as an employee, you earn wages, and those are generally taxed, although a treaty may exempt some amounts. If you're a teacher or researcher, that can be unlimited amounts. If you're a student, generally it is a smaller amount. And remember, this may or may not get reported to you on a 1042-S. Scholarships are going to be tax-free for everybody if they are for tuition, required books, or fees. You may have a treaty exemption for other expenses. And if you're from the Commonwealth of Independent States, it's for living expenses only, and it's a limited amount. For everybody else, it's going to be taxable income, just like an American citizen. Lucky you guys. If you are self-employed, that means you have your own business. Even if it doesn't feel like a very big business, if you're still charging money for something, you are operating your own business. Generally, that income is going to get reported on a 1099 NEC or 1099 miscellaneous. It is out of scope for non-resident aliens. So it is in scope for residents. So if you are doing that with us, it is in scope there. But for non-resident aliens, it's out of scope. A state income tax refund. So if you filed your tax return last year and you itemized, and doing that itemizing reduced your income, and then you get a state tax refund, that refund is going to be taxable income for you this year. And then finally, dividends and capital gains. So this is, think stocks. So if you have a dividend or a capital gain, generally it's going to be taxed at 30%, although there can be treaties sometimes, though there are not a lot of them, and it does get complicated. If you have bank interest, so you have a checking account, savings account, if you get a bonus for opening a checking account or a savings account, that is not going to be taxable. And there's not even a spot to put it on the 1040-N. All right, as a reminder, so we talked about our treaty reference kind of hierarchy. So we talk about like the original text of the treaty, then we talk about our publication 901, then we have that 901 tax treaty table, which I referred to when I was showing you the 4011, and then the 4011 itself, right? So as we go down that hierarchy, it gets more summarized and more summarized. So remember, if you have questions about it, you can always work your way back up. Go to that table, go to the publication. You need to go to that original text of the treaty to try to figure out what's going on there. A 1042-S is reporting for common treaty exempt income. If it's wages for a student, that's a code 20. It's in box number 1. It tells you what kind of income it is. Box 1, code 20 means wages for students. Code 19 means wages for teachers. And remember, this is based on their visa type. It's not based on the actual work that they do. So somebody that's here as a PhD student, even though they're working as a teaching assistant, they will be eligible for code 20 because their reason for being here is to be a student, right? Their job is not really to teach. Their job is to learn and get that degree. Scholarships and fellowships are code 16, and that's unlimited amounts except for, again, those countries from the Commonwealth of Independent States, which that list of those countries is in the 4011, and that list is correct. You can use that one. All right, I talked about my favorites, right? The special fabulous tax treaties. I love them. They're so wonderful. All right, they're fabulous. So if you are a teacher or a researcher from one of these countries, if you stay here for 2 years, no matter how much money you earn, you don't have to pay any tax on it. It's wonderful. But if you stay one day into that 3rd year, that treaty vanishes retroactively. It's like it never was here. It never existed. And now you owe tax on your entire visit. So all of the whole time. So if you ever see anybody that is a J1 teacher researcher from India, the Luxembourg, the Netherlands, Thailand, Pakistan, or UK, have a conversation with them. Are you going to stay here? How long are you going to stay here? If you're going to be here for more than 3 years, or you think you might, don't claim that treaty now. Claim it later if you know you're going to leave. Canada has a super cool treaty, right? Anything under $10,000, if you earn it as wages, is treaty exempt. But if you earn more than $10,000, now you have to pay tax on it all. Germany also has an interesting treaty benefit for wages. Basically, it is retroactively eliminated. So again, it goes away like it never existed if you are here for more than 4 years, which is pretty common. So generally, you would not think that somebody from Germany, a student from Germany, would claim that treaty benefit. And then finally, China, they have a fabulous treaty because the student exemption of $5,000 continues as long as they are a student, even if they become a resident alien. Teachers and scholars get 3 years of their exemption of unlimited amount rather than just the normal 2 years. And this is where we were at the end of last week or 2 weeks ago. Does anybody have any questions before we get into it? Any questions out in Zoom world? Okay. All right, let's move on. So this was our general tax equation. We spent the whole time talking about the very first line, which was income. And now we're going to run through adjustments and deductions and credits and withholding and estimate payments and everything. All of the rest of it all today. So it'll be fabulous. As a reminder, right, treaties can change all of these things. This is what makes taxes for non-resident aliens so interesting. All right, so adjustments. Adjustments are things, are reductions of your income based on money that you've spent. So if you spend it on something that is allowed or is permitted, you can reduce your income so you don't have to pay as much tax. All right, if you had a scholarship or fellowship grant and they gave you money, let's say they gave you $1,000 a month for your living expenses, but you had to buy some lab supplies. You were taking a class that had a laboratory fee. That was a required fee. You spent part of that $1,000. That would be a qualifying expense, and you could use that, enter that as an adjustment to reduce the amount of your taxable scholarship. Hey, if you are an educator and you are teaching, so if you are a teacher that you teach for more than 900 hours in a school year or a year, and if you teach at the K-12 education level, so not a college teacher, you can deduct up to $300 of expenses that you have for your classroom. So if you are an art teacher and you buy a bunch of paints and supplies, that would be the kind of thing you could deduct. Generally, we don't see anybody that qualifies for this because you have to teach for 900 hours a year. That's a lot of hours for somebody that's going to be a full-time student. If you buy a CD and you cash it in early, they'll charge you a penalty on it. And if that penalty is an adjustment, you can reduce your income by that. If you make an IRA contribution, a retirement account contribution, you can reduce your income by that as well. Those are not very common. Those are kind of long-term planning things that we don't typically see for undergrad students here. The one we do occasionally see, though, is student loan interest. So if you take out a student loan and you have to start paying it back, the interest that you pay, you can include as an adjustment to reduce your income. The maximum amount for 2023 is $2,500. So $2,500 of interest, not the principal. It's not available to married non-residents. That's because you can't claim it if you are using the married filing separate status. So that's another one of those bad things about non-resident married alien individuals. Generally, this should be reported on a Form 1098E. We'll see probably 2 or 3 of these a year. So it definitely happens, but it's not a very common thing. But when the people come in, they know who they are. They know that they're having to pay back those student loans, and they have the documentation about the interest. All right, so those are adjustments. So there's not a lot of them, and we don't see very many of them in particular. The next thing are deductions, right? So again, deductions are reductions of your income so that you don't have to pay tax on as much of it. The first option is a standard deduction. So it's a set amount. However, that is generally not available for non-resident aliens. The only people that can claim this are students and apprentices from India. And it has to be students from India. It cannot be teachers or researchers or short-term scholars. It's got to be students. So it's based on the visa type. But they can claim the standard deduction. It's $13,850 this year, so it's quite a good deal. This is definitely one of the better treaty benefits people have. Oof, I have no idea what that is. All right, page down. All right, for everybody else, you are required to itemize your deductions. So this is, again, another list of expenses. Oh, if you spent money on this, if you spent money on that, you can subtract it from your income and you don't have to pay tax on that amount. The list of itemized deductions for non-resident aliens is smaller than the list for residents. So if you're doing the advanced course with us, know that this list is a lot smaller. And it's basically state and local income taxes. And on those, it's up to $10,000, $5,000 again if you're married filing separately. This will generally be tax that's withheld on a W-2 form. It's in box number 17. Or if you file your tax return and you have to pay extra, that counts as well. So you would add that in, and that would generally be done manually because there's no record of that other than your tax return from last year. If you make a charitable contribution to a qualified charity, that is also an itemized deduction. Only U.S. charities count, though. So it's got to be a charity that's based here in the U.S. It is theoretically possible to also have casualty and theft losses in a federally declared disaster zone, although that's out of scope for VITA. So imagine the Hawaii fires, everything burns, you have all of these losses because of it. That would be something that could potentially qualify those individuals to claim the losses as an itemized deduction. Out of scope for us, and I haven't checked, but I don't think Minnesota has any disaster zones this year. I don't know about some of our other schools, so we'll check those to see if there's anybody, but it shouldn't be a problem for us. All right, and that's adjustments. So we have income, we take away adjustments, we take away deductions, we get taxable income. We take that times a tax rate, and we find out how much tax you owe. Now we start reducing the amount of tax you owe with credits. The bad news, or good news, depending on what you say, is that there are very few credits, again, that non-resident aliens are eligible for. There are some credits that they absolutely do not ever get. So those are the absolutely no credits. And it starts off with a big one, which is education credits. So there are 2 big ones, the American Opportunity and Lifetime Learning credits. But those are not available for anybody that is a non-resident alien for any part of the year. So we don't have to worry about those. If a student comes in and they're a non-resident alien and they have the 1098T form, we can just say, put that in your records. You're not going to need it for your tax return. That's only for resident returns. Some universities provide them to everybody, kind of no matter whether they're a resident or a non-resident alien. Other schools do figure out, hey, you're a non-resident alien, you can't claim this credit, we're not going to send you that form. The next one is the earned income tax credit. And again, absolutely non-resident aliens are not eligible for it at all. Makes our life a lot easier. Unfortunately, bad news for all of our clients because they have to pay more money. They don't get as many credits to reduce that. All right, and now my favorite, maybe credits. So there are a few credits where occasionally people will qualify for. I would say this is in the order of 5 people, 10 people this year that we'll see that qualify for them. So it's not large numbers. But there is the child tax credit. So a non-resident alien who has a child that they can claim as a dependent can claim this credit. So this is kind of a two-way street when you think about claiming a dependent. So the non-resident alien that's filing the return must be able to claim a dependent. Most non-resident aliens cannot do that. Only individuals from Canada, Mexico, India, and South Korea can do that. It's written into their treaties. That's why they can do it and nobody else can. So they can claim dependents, but then they have to have somebody that's eligible to be a dependent. And to be eligible to be a dependent, you must be a US citizen, national, or a resident alien. You must have a social security number, and you must meet the other age, relationship, and income, and all of those other tests to be a dependent as well. All right. Generally, the only way that we see this happening is if someone comes here, they have a child that's born in the US. That child is automatically a US citizen. They are eligible for a social security number. If that parent is from Canada, Mexico, India, or South Korea, they can then claim that child as a dependent on their tax return. That's typically what we see. There is a credit for other dependents, which would apply for people if the child is not eligible for a social security number, so they're not a citizen, but they are perhaps a resident alien. Now, I can think of like crazy scenarios so that the parents are a non-resident alien, but that child has been here long enough to be a resident alien, but it involves like one parent staying and one parent leaving and coming back. So haven't ever seen it in a tax clinic. Theoretically possible, but we haven't ever seen it. But if it was, again, the parent has to be able to claim the child, and that child has to meet the criteria to be claimed as a dependent. The final one is the child independent care credit. Oh, yes, go ahead.
Only children are dependents. How about senior citizens?
Yes. So parents can be claimed as a dependent if you're from Canada or Mexico. So they can be claimed as a dependent. But again, that would be an ITIN. You'd have to provide over half of the support for them. So it is not something that we've typically seen. But yes, you're right. It could be. So coming back to the child independent care. So this is a credit. So if you have a child and you pay for daycare so that you can work or that you can go to school, you can claim a credit for this on your taxes if your income meets certain thresholds. You have to be able to claim that child as a dependent. And the kicker here is that you cannot claim when you're using the married filing separate status. So if you are single and from Canada, Mexico, India, or South Korea, have a child that was born here in the United States and pay for that child to go to daycare while you go to school, we can talk to you about this credit. But it would be a very unique set of circumstances for somebody to be eligible for it. All right. The child tax credit, again, we'll see 5 to 10, somewhere in that range of people that have that, meet that criteria. The other two, incredibly unusual. We don't really see those. All right. Moving on down. All right, let's talk about Social Security and Medicare, which are collectively known as FICA taxes. So Social Security is a government pension, right? You reach age 65, 70, you've worked all your life, you will start to get a little bit of money back every month. Medicare is government medical insurance for when you're older as well. The way it is paid for is if you're an employee, when you're working, you pay half of the cost out of your paycheck, and your employer pays half of the cost. If you are self-employed, if you have your own business, congratulations, you get to pay both halves of that tax yourself. Now, the key for us is that non-resident aliens that are holding F1, J1, M1, or Q1 visas are exempt from Social Security and Medicare taxes. So they're exempt from those taxes. They don't have to pay them. And self-employment income from them is exempt as well. So if they were working independently, we couldn't help them. We're out of scope, but for whatever it's worth, they don't have to pay those taxes. All right. If a organization withholds that tax in mistake, we can help those people get that tax back. Forms 843 and 8316 are what are used to file for that refund. It is entirely separate from the income tax return. So it doesn't have any impact on the income tax return. It doesn't have to be taken care of before or after you file. We help people with this, but we help them with it over the summer, right? Because from mid-January, well, mid-February through mid-April, we are focused on tax returns, tax returns, tax returns. And then everybody's focused on finals. And once finals are done, we say, okay, now we can start helping people with FICA tax refunds. If you're interested in doing this, please just shoot me an email. I'll put you on your list. We do a little training every year in the summer, like late May, and then help a few people over the summer with all of those.
Is this only able to claim refund within, right after the filing date?
I mean, so we don't typically help with people right after the filing day, but the people can, right? They can do it on their own and send it in whenever they want to. So, and they don't have to see us for help, but it's a little complicated, so it's helpful to do that. Yes. Yeah. All right. Thank you for that lead-in question. So the question was about J2 visas. So F1, J1, M1, Q1, non-resident aliens don't pay FICA taxes. Who does? So if you become a resident alien and you're on that -1 visa, you have to pay FICA tax. So once you're here, you're no longer exempt, you're a resident, you have to start paying those taxes. If you are here on a -2 visa, you have to pay those taxes as well, even if you're a non-resident alien. So the exemption is only for that primary visa holder, the -1 visa holder. If you are here on a different non-immigrant status, like if you change from being an F1 to like an H1B, you have to start paying those taxes as soon as you're on that H1B visa. If you earn income in violation of your immigration status, then you also have to pay self-employment tax on it as well. So if you're naughty and breaking the rules, the IRS doesn't care that you're being naughty and breaking the rules, that you're not supposed to be working according to your visa. They care, are you paying your taxes? That's all that they care about. All right. Any questions on that? Yes.
Well, foreign students who are in the US over 5 years, does that mean like 5 years, maybe like the September of this year, for example, that means like their income until then would also include the FICA tax?
Yeah, so yep. So the question is the 5 years, is it like a calendar duration year or is it a calendar year or duration year? So it's really that 5 years is calendar year, right? So that first year that you come in, let's say you came in 2018, right? So you came in August. It was only 5 months, 4 months, whatever, but that counts as one of your 5 years. So then 19 is 2, 20, 21, and 22, that's 5 years. So in 2023, you will be subject to the substantial presence test. If you pass that test, you're a resident, you'll have to pay taxes, and you'll have to pay them for like the entire time that you're a resident. All right, any other questions? All right, let's talk about tax forms, general information here. All right, so back a couple of years ago in 2021, they redesigned the 1040 NR. It used to look very different than what it does now. And now it's very similar to the standard 1040 form. So if you're doing both the resident and the advanced classes, you'll understand that you look at those, you're like, oh, that's not that far apart. There is one additional schedule that everybody has to file if you're filing a 1040 NR, which is a Schedule OI for other information. Then there are additional schedules that you will file only if you need them based on your situation. There's schedules A, NEC, and then 1, 2, 3. And those 1, 2, 3 are the same ones for residents. They're the same exact ones. All right, so what are on those forms? At a very high level, so the 1040 NR is the general tax form for non-resident aliens. So it goes through all of the income, all of the, well, the summary of like the adjustments and the deductions and the credits. All of that information is on there. Schedule 1 has additional income and adjustments. So all kinds of different types of not very common income, as well as the adjustments that we talked about. This is where taxable refunds show up. This is where scholarship income shows up, and qualified expenses if you have them for your scholarship. Schedule 2 is additional taxes. Not very common. We can occasionally see this if we have a non-resident alien student that took money out of a retirement account. So imagine they had an internship over the summer, they got signed up to automatically contribute to the 401k plan, but when they left, they were under like the minimum to keep the account, so they got cashed out. They get charged a little penalty for that, unfortunately. That would show up on Schedule 2. Schedule 3 are additional credits and payments. Again, very unusual, but theoretically possible if they voluntarily contributed to like an IRA, or if they were single and they paid for childcare. Schedule A has the list of itemized deductions. So state and local tax paid, charitable contributions. Schedule NEC is not effectively connected income. That's where we put the dividend and the stock sale information. And then Schedule OI, that other information, it's got a lot of the same information that the Form 8843 has on it, but it also has some information about treaty exempt income. So if somebody has a treaty exemption, it's got to be on that Schedule OI, telling what country, what treaty article it is referring to, which tells you what kind of income it is, and then the amount of treaty exempt income. And we're only going to use the schedules if they are used on the return. Otherwise, we don't need to include them. So we minimize the amount of paperwork that we have to do and they have to send in. And then as a reminder, that Form 8843 that we've already worked on, that is only for the people that are exempt from the substantial presence test. So you can not be exempt and still be a non-resident alien and need to file a 1040M. When is the tax return due? So one critical thing that's kind of trips up a lot of our people is that the tax year is the calendar year. It is not based on the academic year. And taxpayers are cash basis. So if I promise to give Zihao $500 for leading the tax clinics next year, it doesn't actually count until I actually give him the money. Just because I promised to give it to him, I might not be reliable. I might not actually pay him. It doesn't actually count. For tax year 2023, when we look at this, we're going to look at all income and all expenses from January 1st through December 31st. It's not per job, again, not based on the academic year. The return is due on April 15th. So no holidays are affecting it this year. It's the traditional April 15th. If you have taxable wages, theoretically, it's June 17th. If you don't have any taxable wages, that would be somebody that, say, only has to file a Form 8843 or they only had a scholarship. We're going to encourage everybody to file by April 15th because our tax clinics wrap up by April 15th. So our ability to help is much more limited once that deadline passes. The dates that we use are always going to be month, day, year convention. All right. Where to send the forms? So for the vast majority of our clients, we're going to electronically file. So they click a button, off it goes to the IRS, to the state. We don't have to do anything more. Occasionally, there are returns that have to be paper filed. This would be people that only need to file a Form 8843 and they don't have a Social Security number or ITIN. It's got to go in on paper. That's the only way to send it in. Other times there can be things like if you're married and you have a spouse that doesn't have a Social Security or ITIN number, you have to file state returns, if not federal returns, on paper. If you are mailing them in and you're not putting a payment with it, it goes to the Department of Treasury in Austin, Texas. If you are sending a payment with your return, you have to send it to the Charlotte, North Carolina address. Now, they don't have to do anything special when they mail it, just like go to the post office, get probably a couple stamps, but it's just standard stamps would work just fine. I always do try to encourage people to do something like USPS priority mail. The reason why is that you get the receipt to know like it was shipped, it was picked up by the post office, it was delivered on this date. Sometimes like it's better now, but for a while there, right, returns were sitting for 12 months to get processed because of COVID. And so if you are waiting that long, knowing for sure that your return is there, that it didn't get lost in the mail is a really good thing, especially if you're getting a nice refund, right? It's worth $9 to know for sure that they've got it and when that refund should be arriving. All right, if you owe money, so if you have come to the clinic and it's a bad day, there are lots of ways to pay. The IRS is very happy to take your money. They will be happy to take a check, only from a US bank account, though no other banks, no outside of the US banks, but they'll take a check. You can do direct withdrawal from a checking or savings account. You can either do that by creating an account online with the IRS and going online and filing there, or when you file your tax return, you can put in your bank information and then they'll do an automatic withdrawal. You can go online to the IRS website and pay with a credit card or debit card, but they charge extra fees for that. You can also sign up for an installment plan if you need to or want to. You will generally still owe some interest or penalties, so it's not free, but if you have a large amount that somebody owes, that's an option for them to do so that they can sort of address it. If you are getting a refund or an overpayment, right? Another word for a refund is an overpayment. You've got a couple of options. You can request a check. IRS will be happy to send you a check in the mail. It will be mailed to anywhere in the world, although there are no guarantees about its delivery or how long it will take. The checks are valid, I believe, for 1 year, so you've got some time. And it will be in US dollars. So if you have it mailed, if somebody has it mailed to their home country, they need to be able to get a US dollar deposited or denominated check deposited. You can also do direct deposit, which is what we try to encourage everybody to do, right? It's faster. The IRS sends that money a lot faster. The bank account doesn't move, so it doesn't matter where you are. If you can leave your bank account open when they leave for that after their final semester, that means that money gets deposited. You can also split the money between multiple accounts if you want to do that. There's a form 8888 that's used to do that as well. But it's pretty straightforward, works really well. All right, I already talked about out of scope returns, although I did bring out another color just because I'm a color crazy person. Purple is going to be TaxSlayer software issues. So red is IRS, they say we can't do it. Purple is TaxSlayer software. Green is when you need it, both the resident, advanced, and the foreign student test. And then blue are things where we limit the scope in our clinics. And the reason why is I believe we have an update on the income limit for this next year. So last year it was $73,000. If you earn more than $73,000, the software just wouldn't prepare your return. It would let you enter everything in it. It was very frustrating that way, but you couldn't get it. You get to the end and it would say, oh, sorry, you can't prepare your return. See us for help. The new number this year is $79,000. So it's gone up quite a bit, over about 10%. So that will be good. That'll be more people that we're going to be able to help. All right. So let's talk about one more thing really quickly, what to do if you have a tax issue that you're just not very sure about. All right. So if you are there and you're with the client and they're saying, what about that? And you're, I don't know. All right. Your first thing that you're going to do is look to your references, right? Your 4011, I would say, so we always have them at all of the tax clinics. They're always available online. Carry that thing around with you. Go to that first, right? That's going to have a lot of the information that you would need. We will have guides there about how to do stuff in TaxSlayer, right? That's a lot of what we're going to spend our spring training sessions on is practicing with TaxSlayer. So when that person comes to you and says, yeah, I had an extra state tax payment I had to make, but I can't figure out where to do that. You'll say, oh yeah, just go here, 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 and 30 seconds later it's entered and it's all done. But it takes some practice to know where to do that and how to do that really quick. The forms, the instructions, the publications, we'll have a bunch of them. If not, we'll have them online. At all of our tax clinics, we also have 1 or 2 experienced volunteers that are designated to help answer questions as well. Particularly at the beginning of the season, we know that this is people's first time. You're going to want a little bit of extra help. We have our experienced volunteers who are very gracious to do that with us. For the next resource is your site coordinators. So at our tax clinics, they're generally going to be wearing a red shirt. They're very easy to identify. They have a good experience as well. You can ask them, what do we do? If you can't figure it out or you just don't know what you're going to do, so we have a tax assistance email. So you're going to tell that person, I'm sorry, we don't know the answer. We want to make sure it's right because it's most important for it to be right. We're not going to tell you something that's wrong and say, oh, sorry, you have to change your return, amend it, because that's not good. We're going to say, please, we need a little bit more time to research. Email us here, we'll get the answer. Usually every year, there's 1 or 2 questions that even I don't know, right? And I've done this for quite a few years. I go back to my IRS people, I say, okay, what should we do about this issue? They look it up, they get back to us, and off we go, right? And that's how we all learn and get better every year. It's not the perfect answer, but it's the right way to do it, right? Because we want to make sure that those returns are right. Now, if this is for your own knowledge and you're not really sure and you don't really need to answer a client, just email me at volunteer. I'll answer whatever questions that you have. I'll answer personal questions. If you're like, oh, well, I have whatever, how should I handle this? We can talk about all of that stuff as well. All right. Okay, with that, completing the tax forms. Any questions on that before I move on here? Okay. Actually doing it. All right. So as we get to the forms, so did everybody grab one of the packets of the forms over there? You don't need to get it now, but if you didn't, we'll have you go get those here in just a few minutes. All right. So everybody's tax return has to have a number, a tax ID number, so that the IRS knows who this is for. Usually it's going to be a social security number. That means that the client has been authorized to work based on their visa status. Sometimes it might be an ITIN number, which means that the client is not authorized to work. Generally, that's going to be people that have a taxable scholarship. So think student athletes on a full ride or PhD students who have a fellowship. The IRS will only give that ITIN out if somebody has to file a return and they're not eligible for a social security number. So they won't give one out just because somebody wants one. Or even if you need one for a credit card, the IRS does not consider that a tax return. So you have to, that's not enough to qualify you for an ITIN. All right, getting an ITIN is tricky. It takes a while. We help. So if we find anybody that needs an ITIN, we'll be doing ITIN appointments all through the spring as well to help people do that. All right, filing status. So married means married. It doesn't matter who the spouse is. It doesn't matter where the spouse is. You would be surprised how many people ask that question. Married is married. We're always going to use married. Married filing separately, but still married. All right, or you're single. You're not married. Or you were married, but now you are legally divorced or your spouse has died. There is a potential third option, which is the qualifying surviving spouse. This would be an individual that was a resident, again, Canada, Mexico, India, or South Korea. Their spouse died in 2021 or 2022. They didn't remarry. They have a child that is eligible to be claimed as a dependent and a bunch of other criteria. Not very likely for us to see. We haven't ever seen one of those. Theoretically possible though, so that's why we cover it. This form can also be used by estates and trusts, but those are fortunately out of scope. We don't have to worry about them. And our filing status determines the tax rate schedule that we use and your eligibility for some credits, right? I already said a few times, right? Oh, if you're married filing separately, sorry, you don't get that credit. Sorry. All right, there is a checkbox on digital assets, it's now called. So at any time during 2023, did you receive as a reward, award, or payment for property or services, or sell, exchange, or otherwise dispose of a digital asset, or a financial interest in a digital asset? You just check yes or no. All right. It's a little bit updated from last year. So it doesn't say like virtual currency. It's got a few other little minor things. If you are buying something and that's all you've done, you've just bought it, that is a no, right? If you get paid in Bitcoin for doing your DoorDash or something like that, that is definitely a yes. All right. And if you check yes, that part of your return is going to be out of scope, right? Because those things right there, those would say that you've either got income with the digital asset or you've sold it, so you've got a transaction. So the IRS does not treat digital assets like they do other types of currency. So they treat it like it's property. The stock is like kind of the best example, the best way to think of it, right? So if you buy a stock, nothing happens. But if you sell a stock, then you now have a transaction, right? If you make money on it, you've got a capital gain, you've got to pay taxes on it. If you lose money, there's a loss that may offset a gain, and it gets more complicated from there. Virtual currency and digital assets are out of scope for our tax clinics. So there are some good links on the websites, on the IRS website in particular about that. So if we do have people that do this, we can send them to those and say, good luck. I wish you the very best. All right, dependents. So I already talked about this a little bit for the credits, but a couple of things to keep in mind. For tax purposes, a spouse is never a dependent. It doesn't matter if the client provides all of their own support. On taxes, a spouse is never a dependent. Now for visas, spouses are dependents, right? They're here on a -2, that's a dependent visa. But for taxes, they're not. So it is a difference we need to make sure we keep in mind because there's a lot of confusion about that. So spouses are never dependents for tax purposes, but children can be dependents, right? They are always dependents for visa purposes, and sometimes they are for taxes. Again, Canada, Mexico, India, or South Korea, those are the people that are eligible to claim a dependent. The child must be eligible to be claimed. So they must be a US resident or resident alien, which is a citizen. They can get a social security number. They have to actually get it. They can't just say that they were born here. They have to have a social security number. If they're a resident alien, they could get an ITIN. Again, I can think of crazy scenarios of how that could possibly happen, but it's not likely to happen. And the child must have lived with the client for more than half of the year, and again, not provided more than half of their own support. Not common, does occasionally happen. All right. Exemptions. So when we talked about how we reduce our income, we say income minus adjustments, minus deductions. There used to be a thing called exemptions. And exemptions, you subtracted from your income based on people. So it wasn't on how you spent money, it was based on the number of people on your return. This typically was yourself, but those people, again, from Canada, Mexico, India, or South Korea, they could actually deduct based on their spouse or their children. In 2017, there was a tax law change that reduced the exemption amount to 0. So right now it's at 0. So there are no exemptions. It is, in the current law, it's going to end in 2025. We'll see if they keep that or change that. But for right now, it's 0. There's nothing in the forms, even though it does theoretically still exist. But because it's a 0 now, that's why non-resident aliens have to file with any amount of income. Because they don't have to file if their amount of income is below the exemption amount. The exemption amount is 0, so if you have any income, you're above it, and you got to file. All right. And that is that. So our remaining agenda, I am going to work through filling out some forms to show you how we go through the process of doing this. I'm going to encourage you. This is not how it's going to actually go in a tax clinic, all right? This is for us to learn how the forms should work, and it's to separate learning the tax law from trying to learn the tax software. Because as much as I love TaxSlayer, and sometimes I don't love it at all, it is not good always about non-resident returns. Sometimes you have to do some crazy stuff. So I don't want you to have to try to learn how to mess things up in TaxSlayer to get a good return and how to actually do how the form is supposed to work. So we separate that. This fall, we're going to do it by hand. That's all you need for the test. There's nothing super complicated for the test. This will work just fine for the test. And then in the spring, we will become software experts. Okay. All right. Okay. So if you're here and you haven't, there are packets with the forms, like one of everything on the forms. And there are packets of our scenario information with Lisa and Sunil. All right.
I have a question.
Yes, please ask your question.
For non-resident alien, are we able to do injured spouse?
For a non-resident alien, injured spouse, I will have to get back to you. I have no idea. My first thought is probably not, but I don't know. Okay?
Okay, thank you.
You're very welcome. And I love it. I get to learn something new.
Because I did injured spouse a couple years for a resident, like the U.S. citizen one, but I didn't do it for non-resident.
Yeah, I am not sure.
Okay.
My first thought is probably not, right? Because they have to do married filing separately. But I don't know.
No, it's joint. It's joint. If you file, it has to be joint, but it has to be a refund.
Yeah, so you can't file joint as a non-resident alien.
Oh, you can, okay.
So I'll confirm. I'll report back at our next training. All right.
Thank you.
Of course. Yes. All right. Okay. Give me, let's see here. Do this. We're going to do, no, I'm going to go back to here. Okay, so we are going to do draft forms. All right, I think that'll be good for now. Okay. All right. Okay, so let's talk about Lisa. Everybody remembers Lisa, right? Lisa is my favorite. Lisa is our friend. She's an F1 student from China. She came here on August 8th, 2021, right? It was a lucky days, 8/8. Went home to China the summer of 2022, was here all of 2023, which was great. She worked on campus, and now we have some new details. She filed a tax return for the first time in March of 2023. She came to visit us. She claimed the treaty for her wages. She had paid $750 in tax, and she got a $205 federal refund. For her Minnesota return, that was not as good. She paid $350 in tax that was on her W-2. Then she had to pay some additional tax. She paid an additional $107. So she was not very happy with us. She's studying accounting. This is her passport, date of birth, all of that information. And now we have some income documents for her. We have a 1042S, which is income code 20, which is treaty benefits for wages while studying and training. And the amount is $5,000. Oop, and I made a mistake on her ID number, her tax ID number. Uh-oh. All right. The next thing that we have for Lisa is a W-2. So it's for $8,400. She had federal tax and state tax withheld as well. All right. All right. So that is what she comes to us with. So let's walk through, how do we figure out, what is Lisa's treaty benefit and how much income does she need to report on her tax return? All right, I'm going to grab my 8843. Okay, 92. Okay, so here is a handy little table that I created, which you guys are welcome to use for any other questions or problems that you have. It's a good way to try to organize it and think about it. right? So Lisa only has one type of income, right? She only has wage income. So there's just one row. If she had other types of income, we could do a scholarship income, we could do a dividend to look at the type of income and how much was reported on the different forms. But for Lisa, it's simple. It's just wages. She has a W-2 for 8,400 and she has a 1042S for 5,000. That means that her total income was 13,400. All right. So the way it works, the way it is supposed to work, right? Lisa comes in, she says, I'm going to start working. I'm from China. She signs paperwork in 8233 with the payroll. And they say, great, congratulations. You get $5,000 of treaty exempt income. So she starts working and she will continue to earn money up to $5,000 and she won't pay any federal tax on that money, right? But when she hits $5,000, now the university is going to start withholding tax. So that first 5,000 is treaty exempt. It gets reported on her 1042S. Then everything else above it goes onto the W-2. All right. And for us, it's great because if we look at the table on page number 15 in our 4011, that's countries with treaty benefits for studying and training, income code 20. We find China and we see that there is no limit on the number of years. Hooray for them. But the maximum dollar amount is $50. And the treaty article is 20C. So her 1042S amount matches her treaty benefit, which is great. That isn't always the case, right? All kinds of stuff happens. People don't do their 8233. They work at two places. They do it 2 times. All kinds of stuff can happen. So remember again, right? The form that you get your document on is not definitive. It does not determine whether you get a treaty benefit or not. All right. What matters is the filling out of the tax forms, the combining all of your types of income and the treaty benefits to say, okay, as a student from China, my treaty benefit is 5,000. I can subtract that from my total wage income of 13,400 to find out that I'm going to have to report $8,400 of wage income on my tax return. Any questions about that? All right. You'll also notice, if you were paying lots of attention, which probably nobody was, that the forms that I have here, sometimes they have different copies, right? This one is a copy B. This one up here, that one's a copy A, right? Generally, the copy doesn't matter, right? Whether it's A, B, C, D, like A is for the IRS, B is for the person, C is for the federal return, or it's something else and I've got it wrong. It doesn't matter, right? As long as the information is the same, and it should be the same. They're going to get like 3 or 4 copies. As long as the information is all the same, it's all good. The only time that can be a little bit confusing is if they work in multiple states for the same company. They'll get like 3 W-2s and it'll say total state, and then Minnesota state, and Wisconsin state, and whatever other states they're working in. So keep an eye out for that if they work in multiple states, but generally it's all going to be good and it won't matter what they have. All right. If you have to fill out forms, the suggested order, my recommendation for this, start with your form 8843, then go to your schedule OI. You're going to copy a whole lot of stuff from there. Look at schedule 1 and 2 and 3 if you need to do those. Then go to schedule A, then go to schedule NEC, and then finally do the 1040NR, right? Because to do that 1040NR, you're taking all of the information from those supporting forms, is the way it works. Okay, so let's do that. All right, I am not going to do Lisa's 8843. I'm going to say that it's already been done. So this is what the schedule OI looks like. And everybody should have their own copy of this. If you want to, as a good reference for future examples, for the folks that are here in person, you could write down and fill out the forms along with me, because then you'll have Lisa's raw information and the filled out form, so you know exactly what it looks like. I will post the finished copies as well, but it's always good to fill it out yourself. Okay, so first name, last name, she has no middle initial. her identifying number, which is her social security number, right? She doesn't have an ITIN, she's working. All right, what country were you a citizen of, or countries? She was a citizen of China. What country do you claim tax residency of? Also China. Have you ever applied to be a green card holder? That would be a no. Was she ever a citizen? Nope. Were you ever a green card holder? No, she was never a green card holder. All right, if you had a visa on the last day of the tax year, enter your visa type. We know that, F1. You didn't have a visa, enter your immigration status. Okay, we don't have to do that. Have you ever changed your visa? No, she's never changed. If she had, we would say yes, and then like F1 to J1 on whatever date. All right, list all of the dates that you entered the United States during 2023. All right, this is where one of the fun little random quirks comes in. We have to enter the very first day that she was present in the US during 2023. Does anybody have any ideas what we should put for that? The first day that she was present in the US in 2023. Yeah, January 1st. Yep, it is January 1st. That's right. So even though she never she didn't really sort of enter the US, right? She was like here the entire time, but it's the first day that she was present. And it only wants 2 digits for the date, so we'll do that. If she was in and out a whole bunch of times, then we would put in and out a whole bunch of times. That's totally fine. All right, number of days that she was here in the United States in all of the different years. We're going to copy all of that information from our 8843 or from this table here. All right, so this is why doing that 8843 is helpful, because then you can just copy those dates, 365. Did she file a tax return for any prior year? Yes. What did she file? The latest year and the form number, 2022 1040 NR. Are you filing a return for a trust? No, sorry, Lisa, no trust. All right, did you have compensation of $250,000 or more? No, we did not. And we skipped that one in the middle because that's an if yes, then you have to answer a question. Same thing on this one right there. All right, item number L, income exempt from tax. If you're claiming exemption from income tax under a treaty with a foreign country, complete 1 through 3 below. All right, country is China. Treaty article, this is where we go back to our friend 4011. We say it is 20C. 20C. All right. Number of months claimed in prior tax years. All right. So we know that she filed a tax return for last year. So I would say 12 months because she claimed it for 1 prior year. And then amount of income exempt in the current tax year, $5,000. Now, if Lisa had a treaty benefit for a scholarship as well, we would enter that next. We would say China again. The article would be 20B. The number of months would be 0 perhaps, or however many months it was for her, and then whatever amount it was. So we would enter all of those there. All right, and then on line number E here, we enter the total amount of income exempt by a tax treaty, and then enter this information on line 1K. So we're going to jump over here really quick. Line 1K, 5123. All right. Were you subject to tax in a foreign country on any of the income? Nope, you didn't have to pay tax. That doesn't affect anything. It's just a yes or a no. Are you claiming treaty benefits pursuant to a competent authority determination? No. All right. And then on M, are you making an election for real property? This is a no. We would say no for those things. Those don't apply for her. All right. And that is her Schedule OI. All right. So mostly copying from the 8843 plus adding the treaty exempt income is really all we're doing there. All right. Where's my order? Okay, we did Schedule OI. Let's look at Schedule 1. Did I open that up? I did not. Find Schedule 1. Okay. Okay, Schedule 1. So Schedule 1 is other income. And number 1 on that, taxable refunds. Credits, offsets of state and local income taxes. Did Lisa get a state income tax refund last year? That's right. I saw a couple of heads shake no, right? She did not. That's a federal refund. That's a federal refund. Yep. For state, she owed money. She owed $107. So she doesn't have anything there. She doesn't have any of this stuff, right? No alimony, no business income, no farm or unemployment, no gambling, no Alaska permanent dividend funds, nothing, 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 nothing. Nothing down on line number R, which is scholarships and fellowship grants. She doesn't have anything here. All right, let's look at page 2. All right, these are our adjustments, right? You've already seen a bunch of these. Educator expenses, health savings account, moving, alimony, penalty on early withdrawal of savings, IRA deduction, student loan interest deduction. But she doesn't have any of this stuff either, right? Lisa is a pretty simple girl. Life is easy. There's nothing on here that she needs to fill out, right? There's nothing for Schedule 1 for her. So we just close it. We don't need to do anything there. Let's go to Schedule A. All right. Schedule A is her itemized deduction. So Lisa is not a student from India, so she will have to itemize her deductions if she has anything that she can put on here. If she has 0 itemized deductions, then we won't fill it out. It'll be blank. We don't need to send it in. But if there's stuff we can put there, then we will do that. So let's see if we can find anything for Lisa. Cut down the amount of tax that she has to pay. All right, medical and dental expenses. She does not have anything like that. Taxes that you paid. All right, this is good because we know that she had to pay taxes. All right, so state and local income taxes or general sales tax. So how much did Lisa have to pay in state taxes? All right, we can look at 2 places for this, right? The first one is her W-2. In box number 17, it tells us how much she had withheld, she paid in state income tax during 2023. It would also count for local income tax. So we would also look at box 19 for when we get into Pennsylvania refunds, they have a local income tax. So we will see that there. All right. So we know that she paid at least $449 of state income tax. Was that all that she paid in state income tax during calendar year 2023? That's right. Yep. Yes. Yep. Uh-huh. Did I open the wrong one? I sure did. Maria, thank you. Good job. Good catch. All right. There we go. How about that one? Very good. Very good. All right. So let's try this again. Look, it's so much shorter. It's even better. All right. Taxes paid. State and local income tax. 1 line. Super good. All right. $449. That's not all though, right? Because she had to pay more. She was mad when she left our tax clinic. She said, those people, I had to pay more taxes. I saw a bunch of people getting refunds. Why did I have to pay taxes? So we didn't do a very good job of educating her. But she had to pay an additional $107. So really quick math to say 449 plus 107 is 556. Does that sound right to everybody? All right. So when you are reviewing returns and you're looking for things, this will be one of the things that you want to check, right? What is on this Schedule A? Does it match what's on the W-2? If it does not, right, that's a question to say, hey, why is this number different? Did you have to pay extra tax? A lot of people do. It's very common, but you want to make sure you understand where that came from. All right, 556. Gifts to charities. Did Lisa give any money to charity? Let's see. No, she did not. No casualty or theft losses, no other itemized deductions. Super easy, 556. Super easy once you get the right form. Thank you so much again. All right, so, and it says, enter this amount on form 1040 NR line 12, right? So it's already telling us what to do. 556. Okay. Coming back to here. We've done Schedule A. Now let's do Schedule NEC. NRN. All right. I'm going to make it big so everybody can see this. All right. So this is all of her income, if she has any, that is not effectively connected with her trade or business, right? So her trade or business is being a student. So if she had dividends, if she was getting paid interest, if she had industrial royalties or motion picture royalties or other royalties, say she wrote a book and she was getting paid royalties off of that. Unless that was related, well, that's not going to be related to her being a student, and she would enter that information here. For us, she doesn't have any of these things, right? There's nothing exciting going on in her life. She's not doing any stock craziness. Stock would go down here in capital gains and losses from sales or exchange of properties, but she doesn't have any of that here. So we can close it again. All right. So that brings us to the 1040 NR form. All right, so we've done all of our supporting schedules. Now we're going to do the main one. So for the year, January 1st to December 31st, 2023, Lisa, who does not have a middle name. There's her address. Let's make up, what do we say her address was? I can't remember. It's on her W-2. 200 University Avenue, number 1. City is Minneapolis, Minnesota, 55455. All right. You can put a foreign country name and address here. This address that you put, that's where the IRS will send a letter if they don't like your return or they need additional information. So you can put whatever address you want. All right, Lisa is single. So we're going to select single. None of those other things apply. She doesn't have any dependents. She has no digital assets. Thank you, Lisa. All right. So her total amount from her W-2 for her taxable wages, right? We've already said that her W-2 is correct, right? We looked at that. Her taxable wages matches her W-2, which is 8,400. 8,400. She doesn't have household wages from being a household employee, no tip income, none of these other things, no wages, no other earned income, nothing like that. All right, line 1K is already filled out for us, right? We filled that out earlier. Notice that that doesn't go anywhere. It just sits there in the front. She says, hey, I had $5,000 of treaty exempt income, but it doesn't go into any calculations. It just stays like that. To line 1Z where we add everything above, 8,400. Now we would have all of these other things if they were connected to a business here, which they're definitely not. All of that stuff is all blank. Line 1 would go, or from schedule, line 8 would be from schedule 1, pardon me. All of those things are blank, so that's just 8,400 there. She doesn't have any adjustments. Her adjusted gross income is 8,400. All right, she doesn't have any kind of qualified business income deductions or anything like that. So her total deductions are 556. All right, somebody want to do the math for me really quick? 156, 78, 44. Does that seem right? Correct me if I am wrong. All right, so her taxable income is 7844. All right, tax. How do we figure out her tax? Well, that's easy enough to do because they have a tax table for it. All right, works very easy. You say, all right, if your income is this, at least this amount, but less than that, and your filing status is whatever, this is your tax. So if Lisa's income was 7844, let's go find her tax. So we're going to do the first column because it's single. 7844. Her tax is 783. Oh, tax is 783. All right, she has no other taxes from Schedule 2. So we just put that in there, 783. No child tax credit or other tax credits. All right, we had lines 19 and 20, subtracting up, so it's all good, 783. If she had tax on her not effectively connected income, like dividends or capital gains, that comes here on line 23A, but she doesn't have anything. Those are all blank. So her total tax is $783. All right. So just a little bit under 10% of her total income because we were able to take that itemized deduction. So next year, if Lisa gets a state tax refund, right, her itemized deduction of her state tax did affect her tax return, right? It lowered her income. So if she gets a refund, she's going to have to include that as a taxable refund next year. And we'll figure out Lisa's state return in January. All right, now let's look at payments that she's already made. So if we go back to here, she has already paid $840 of federal tax on her W-2. She didn't have a 1099. She didn't have any of those, so 840. Oop, that's the wrong line. There we go. All right, line G is our 1042S. Did we have any tax withheld on 1042S? Let's go find it. If she did, it would show up here on line 7A and on 10, which is combined withholding credit. But those are blank for her, so she didn't have anything. And that's what we would expect, right? Because she had this treaty exempt income. There shouldn't be any tax on it. So that's a blank. She did not make any estimated payments, right? She didn't say, oh, I know I'm going to owe a bunch of money. I'm going to send some in now while I've got some. Didn't do anything like that. So that's all a blank. No refundable credits for her. So her total payments were 840. And once again, she is going to be relatively happy with us. She gets a refund, if I do the math right, $57. Yay! Happy days for Lisa. All right. And she's going to say, do I want to get the money back or should I tell them to just keep it for next year? I will take the money back. There's no reason to let them keep it. And she's going to say, do you want to do a direct deposit? And we'll say, yes, absolutely. And she'll say, I have a Huntington bank account. Of course you do, because everybody does at the U of M. We'll make up a number. There you go. If she wanted, she could have her check mailed to a separate address somewhere outside of the United States. If she wanted to do that, that would go here on line number E. If she wanted them to keep it until next year, she would put that on line number 36. And that is basically that. She would put her occupation, right? She's a student. And print it out, sign her name, off she goes.
This refund is taxable for the next year?
No, so this is her federal return. So it's only the state tax refunds or local tax that would be potentially taxable. All right, any other questions on Lisa?
Explain how did you get the 556?
Absolutely. All right, so the 556 was on this page right here. It was her itemized deductions. So because she's from China, she cannot use the standard deduction. She has to itemize. So and that means that she has to fill out a Schedule A. So as we look at the Schedule A, the proper Schedule A for the NR, again, thank you. So this one, state and local income taxes that she paid. So how would we find that information? The first place we look is her W-2, right? And it's going to show that while she was working, every paycheck, they took out a little bit of money and they sent it off to the state for taxes. When we get to the end of the year, we add it all up, and that number was 449. But we also know, because she was telling us about it, that at the beginning of the year, or last year, she filed her tax return. And when she filed her Minnesota return, she had to pay some additional state tax. She had to pay $107. And so we added that 107 plus the 449. And this is a very, very common, this is like the prototypical scenario for a student from China. It's very common with the current Minnesota tax law for them to get a federal refund, but to owe some Minnesota tax. So this is a very typical scenario that you would see in a tax clinic. All right, any other questions? All right. Then I'm going to close this down. I'm going to close this down, and we are going to do another one. I'm going to introduce you to my friend, Sunil. All right, so Sunil is also an F1 student, but he is from India. He came here on August 20th of 2020, and he has not left. So he's lived off campus. He worked on campus for 2023. This is the first time that he's ever worked. So that means it's the first time that he's ever filed a tax return. He's never filed before. He also had an internship over the summer. He is studying physics here at the University of Minnesota, and this is all of his information. And let's see what he has for income documents. All right, so he has a W-2 from the University of Minnesota, shows that he earned $13,000 working here at the U of M. All right, that's pretty cool. And he has a second W-2, right? So his internship was with Cray Incorporated. So they're a supercomputer business. And he earned some good money working over the summer for them. He got $28,000 of wages. And he had a lot more tax withheld for both federal and state. All right, so as we look at Sunil's total income, right, his wages, if we add those two up, 13 plus 28 is 41,000. He doesn't have anything reported on a 1042-X, right? So it's all reported on W-2s. What is his treaty benefit? How much treaty exempt income does he have? If you look at the table, what does it say? Anybody want to say? If somebody's talking online, I can't hear you. All right. Well, I heard a few folks here in the room and they all said zero, right? There's nothing. And that's true, right? If we look at the treaty benefit table for wages, for studying and training, India is not listed. So he does not have treaty exempt income. Does he still have a benefit? Yes. Yes, that's exactly right. He gets the standard deduction. So he has a really good deal, but it is not treaty exempt income, right? It is something different. It is claiming the standard deduction. And so let's do that. Let's see how that goes. All right, let's do Sunil's return. So we're going to open up our forms again. Oh, we're going to close that one. All right. All right, I think that should be everything. Okay, let's do it. So let's go back. All right, 8843. So I am going to be lazy. I'm not going to do an 8843 for him. I'm going to just go straight into the schedule OI. Okay, here we go. So Sunil Sain, what is his social security number? Number 9. Okay. All right, he was a citizen of India. He claims tax residency in India, right? He's a non-resident alien. That means he's not a tax resident of the United States. It's got to be a different country. And for him, it is India. He's never applied to be a green card holder or ever was a green card holder or a citizen. He has an F1 visa. He's never changed. All right. The first day that he was in the US for 2023 was the same, January 1st, 2023, right? Because he came in 2020. He's never left. He's been here the entire time. And you will see why I chose that scenario the way I did, because I don't have to do any math. He came in 2020. So for 2021, he was here 365 days, and 22 was 365, and 23 was 365 as well. So that makes his form super easy for us to do. Did he file a tax return for a prior year? Nope, he did not. So we just say no. He's not filing a return for a trust. He did not receive compensation of $250,000 or more. All right, income exempt from tax. This is going to be blank for him, right? Because he doesn't get to exempt income from tax. That's not his deal. So that's just entirely blank. We just leave it all blank. We leave it all blank. There we go. Sunil's schedule OI is done and very simple. All right, next, let's see. Schedule 1. All right, does he have anything on here? He doesn't, right? No refunds because he hasn't filed before, no business income, no gambling, no jury duty, no scholarships, nothing, no adjustments, nothing there that we need to do for him. All right, Schedule A. Schedule A. All right. Does anybody want to tell me what you think we should put on this? What do you think? What should we put on his Schedule A?
Nothing.
That's right. Yes. We're going to do nothing. We're not going to use this form, right? Because this is for itemized deductions and he is not going to itemize. Now we can look, we should make sure, right? Because he could still itemize if it made sense. So let's just check. So the standard deduction was like $13,850. So let's go.
Itemized deductions are higher to be standard, then he has
Then
a
he-
choice to go for it.
Yep, he can go for it. I've had that happen like twice. It's for like students that work in California that have to pay like huge amounts in state taxes. It's not common. Okay. So, but we'll check for Sunil. So Sunil, state tax of $695, state tax of $1,498. So 700 and 1,500, it's 2,200. Standard deduction is going to be a much better deal for him. So that's what we're going to do. We're going to delete this. We're not going to use it at all. We're going to look at the schedule NEC just to make sure. Yeah, he doesn't have any of this stuff, right? No stock transactions at all, no royalties, no gambling, nothing. So that's gone too. So Sunil's going to be simple and quick, right? He's only got 2 forms, Schedule 1040NR and then the Schedule OI. So Sunil, go sane. His address 152 Eden Gardens Lane, Minneapolis, Minnesota, 555. All right. He is a single guy. No digital assets. Well done, Sunil. All right. So come back to here, right? We add up the types of income. Total income reported on W-2, same as total income. Total income from the 1040NR is going to be that same 41,000. 41,000. All right. None of these other things apply to him, right? He doesn't have any tip income, no Medicaid waiver payments, no other income, nothing. So it just copies down, 41,000, no adjustments. All right. Standard deduction. So 13,850. Oh boy. All right. $13,850. Mental math, really quick. 28,150, something like that. Hopefully that's about right. Please tell me if I'm wrong. Okay. Let's go find his tax in the table. Whoa. 28,150. All right, so this is good. So the way that the tables work, if the line is at least this, but less than this, so 28,150. So it is not this one, it is less than this. So it is at least 28,150, but less than that. So 3161 is his tax. 3161. He doesn't have any credits or any additional taxes that he owes. Pretty straightforward. We just copy it all down. All right, amount of tax he's already paid. So he paid 3,200 when he was working at Cray, and he paid 1,300. So that is 4,500. So if he has more than one, we just add them together. 4,500. 500. 3,500. All right. And Sunil is so happy with us. He's like, gosh, you guys are amazing. You do really, really, really good work. Because he looks at this and he's like, yeah, I get like 30, I get like $1,300 of a refund, over $1,300, something like that. He says, yeah, you guys are great. We say, thanks. We worked really hard to get you that money. That was all us for sure. And he says, oh yes, and I bank at Wells Fargo. I don't like Huntington, so I do somebody else. There we go. And we do, all right, off we go. He's a student too. Okay, so any questions about Sunil?
Any provision that he does not ask to take the refund, but adjusted in the coming years against his salary?
He can do that if he wants to.
So the return has any space?
Yep, it's on line number 36. Amount of line 34 that you want applied to your 2024 estimated tax. That is the keep it for next year. I don't really know anybody that does that, but you could. If you knew for some reason that you were going to owe a lot of tax, or you were going to start a business and you're going to make lots of money, that would be a good reason to do it. All right. Any questions about Sunil? All right, so you've seen two, oh yeah. Absolutely. Did I get something wrong? What did I do? Yeah. So yeah, if you look at it, so line Z, you add lines 1 through H. This is all other stuff. Add lines 1Z. Add lines 1. So the software will do all of the math for us when it comes time for that. Life will be a lot easier from that perspective. So that part will be really good. Okay. All right. So I will put copies of Sunil and Lisa's returns out there on Moodle for everybody to see. All right.
Once you get one voice working and 150.
Yes. Let me go. Which one was that? This 13,850? That's the standard. That's supposed to be the standard deduction. It should be. It's in the booklet. Let's just double check. 13,850. Yes. Page 2. Standard deduction. Also listed. Where is it? There's under the unique treaty provisions on page 12, it talks about the India Treaty and claiming the standard deduction as well. Okay.
So the returns that we don't ask about like assets or any bank accounts and stuff? Not for
No.
anyone?
No, that's not true. So for non-resident aliens, right, the government, the IRS only cares about US source money. And so if you have a bank account and you earn interest, that bank will tell the IRS that you've earned interest, and they will send you a form that says, hey, this is how much interest. And by the way, I told the IRS. If you have a bank account outside of the United States, if you're a non-resident alien, right, they don't care. Like, pretend it doesn't exist. If you are a resident, right, then you pay taxes on your worldwide income, and you have to report foreign financial assets, because the foreign banks, they don't send that form to the IRS that says, hey, we gave you a bunch of money. So the reporting, not to like diverge too much, but the reporting varies based on how much you have. If you have less than $10,000 at any point in all of your assets, then you just do a checkbox, yes or no. If you have more than that, then you have to like send them a report that says, oh, well, I have this account in this bank that's worth this much, and this account in this bank and this much. And then they'll want to say, well, gee, you've got like $100,000 there. Didn't you get some interest? You should be paying some money on that. And if you don't send that report, they can charge some very significant penalties, like 50% of the bank account value penalties. So it's like, think of like really rich people hiding money in Swiss bank accounts. That was their intention, but international students sometimes get kind of caught by it too. Caught by having to report, not hopefully that they get caught having to like lose all their money.
And what about properties like
No.
residential, and cars?
So personal use items, right? There's no tax implication other than like mortgage. You can get an itemized deduction if you're a resident, because the government said, hey, it's great for people to own houses. We'll give you a deal on your taxes if you have to pay mortgage interest. But like for a car, doesn't matter. If you use the car as a business, like you're driving, or if you rent out your home, right, those are businesses, then now you have income and you have to report that income and all of that. But just owning stuff you don't have to do doesn't mean you have to do anything for taxes. Yes.
I'm not sure about the tax regime here. Is interest income in a credit union taxable?
Yes, interest income in a credit union is taxable income. So for residents, it is not taxable income for non-resident aliens, because that's still considered a bank. So even though it's officially sort of a different organization, but it's the same as a bank. All right, any other questions? Any questions online? All right, so we are almost done with non-residents for today. So we're making really good progress. We did Sunil stuff. We've asked for questions. All right.
I have
Okay.
a question.
Yes.
How do you file a manifying joint return on non-resident? Do you have to file both returns or separate?
So you can't file a joint return for non-resident aliens. You have to file separate.
Separate, okay. So both of them, right?
Yep.
Okay.
If they both have income, you have to file 2 separate returns. If
So,
only one has income, then you only have to file 1 return.
so what happens with a child? Like who's claiming the child?
So generally, I mean, number one, right, they have to meet the criteria to be able to claim the child. And you would follow the same, like, who can claim the child for dependent criteria that you have for residents. So you would look at like, who is the parent, who do they live with, coming down to, I think, who has the most income, and they would be the ones that would be eligible to claim a child. That's not typically something we see, because so all of the non-residents that we help, they're all going to be FJ, M, and Q visa holders, right? Those are the only people that are in scope for us to help, even though it would be lovely to help other people, but that's kind of what the IRS has limited it to. So students, so like F2 visa holders in particular, are not eligible for employment. So J2s, like somebody that's here as like a J1 researcher or a J1 teacher, generally their spouse, a J2, might be able to get employment authorization. And so they might be able to work, but it's a very small percentage of the population that does that. But in that case, if you did have two non-resident alien individuals, say they were both from India, they had a child that was born here in the US, then you would go through the same questions that you would have for a resident to determine who could claim them as a dependent. So the publication 4012, I don't have it in front of me right now, but there's a good, who can claim them as a dependent? I think it's the tab C, if I remember correctly.
Thank you.
Yep, you're very welcome. Any other questions? Okay, let's talk about it. So Moodle homework plan, and then we're gonna break. All right, so Moodle is out there. So once again, I promise, I swear, someday Link and Learn will go live. When it does, fireworks will bloom in the sky. It will be amazing. Actually, when it does, I will go through, I will test everything first. I've been kind of holding off so I could give it a real honest go. When that happens, I'll let you know. Standards of conduct, intake, interview, and quality review. You only get 2 chances to pass, so make sure you are careful, especially on that second one if you need to. 80% is your cutoff for a passing score. Everybody's, for the most part, doing a really good job on Moodle. Everybody, some people you get ahead, you fall behind. That's totally fine. The point of all of the homework that you're doing, all of the quizzes, right? It's to all get you ready for that IRS foreign student test so that you're going to be in good shape to pass it. So if you're doing those things, if you're doing a decent job, if you go through all of them, you're going to be in a good spot to be able to pass that test. Looking forward, so I already have these already posted out there. So we've got a quiz on deductions, adjustments, and credits. There's a quiz on finishing out the forms and filling out the forms and filing the return. There is a tax return preparation assignment. So you've already met Harold one time. We did his counting of days. You've met Nick because you filled out his 8843. You're going to get to meet Sergio as well, do his return. Okay. All right. So our plan for next week, assuming everything goes well and it all goes live, we'll do a really quick review. I'll talk about some best practices for taking the test. And then that's what we'll do is the foreign student test, all right? We are not going to provide a big dinner. We'll just provide like some cookies and bars, and that'll be what the day is about. When you pass the test, we will also collect your volunteer paperwork from you, all right? If you are doing the advanced test, we'll have you wait, but otherwise, and I'll go through all of that next time, but basically we'll need your signed volunteer agreement, and we'll have to do an ID check to make sure that your volunteer agreement matches your ID. You can either submit it on Moodle, you can do it live in person if you're here with me in Minnesota, or we can do like a Zoom breakout room so that you can just show it to me over the computer. I can verify it that way. And we can do that either at that moment or we can set something up afterwards, however it goes. Okay? All right. All right. So I want to talk about, because I've had a few questions. What do you do if you think you're not going to be ready? So again, if you've done the work, you should be ready, right? This is my 17th year of taking the test and doing all this stuff. So, and I base it off of what does it take to pass the test in the previous years? What does it take to be successful in the tax clinics? So all of the training that you guys have had over the past few weeks, that is all based on lots of experience with being a part of a VITA clinic, passing the tests, supporting clients. If you feel like there's something that you don't really understand, send me an email, right? I'm happy to talk with you about it. If you want more practice doing whatever because you feel like, oh, I just don't get the dates or something like that, I've got a whole bunch of examples that you can get your head start on. You can, if you want to, choose to wait and take it later, right? Especially if you're behind, you haven't had a chance to get started yet, right? It's may not be the most successful to try to do everything in 1 day or 2 days or something like that. The one thing I will say is that it is a lot harder to like start and then stop and then come back to it, right? Because it's kind of a rhythm. Every week you're building on the stuff you did. You learned this, now you learn this, now you learn this. So when you stop, you kind of have to get yourself back up to speed. So it just takes a little extra time. It's also going to be very easy, right? Because we're going to stop. It'll be finals. It'll be crazy. You're not going to do it then. Totally fine. But then it's going to be winter break, right? Everybody wants a break. You don't want to do anything. All started after the new year. Then things happen and you run out of time. A lot of our volunteers in the past have kind of done that. And they come back to me and say, oh, well, Aria, it's like January 28th and I haven't done anything. Can I still do it? It's like, but you've got a month of stuff that you got to catch up on, right? So don't put it off. That's the best thing that you can do. So if you need to put it off, it's fine, but do your best and don't just wait until January 14th. So we're setting our deadline as January 15th. So you've got to get past the test, get me your stuff by January 15th. But I'm going to encourage you to do it sooner, not just so that you can have a winter break when you don't have to think about all of this, but as soon as you get me all of your paperwork, you get released to sign up for tax clinics. So which tax clinics you want to volunteer for. So if you want your first shot at what you think are the best ones, get your paperwork soon, and then you get first shot at this. Okay? All right.
What if we fail the test?
Lots of people fail the test the first time.
Yeah.
Totally fine. There, you get 2 tries. It's totally fine. I've failed it a couple of times too. Happens to everybody. It does happen to everybody, right? The second time is the key. So we'll go through this, but usually you'll get a report where you can see the questions that you got wrong. And so do a little bit of work to figure out, well, why did I get this wrong? Where do I need to go to find that information so that I get it right? Since this is a new system, they may be all fancy. They might only give you new questions. So who knows what it's going to be like? We'll find out. It's going to be awesome, right? We all know that.
I have a question, Maria.
Oh, yeah, go ahead.
Okay, when we finish every module, I finish the 1 and the 2nd. When I finish the 3rd,
Yep.
I go ahead with the 4. That's the reason. We have to finish those modules in order we
Yep.
can finish the next one. Okay, for the test that you are talking about, the standard and the standard conducts and the intake interview is always the same almost. For previous, I don't know, I haven't done in Link and Learn, I didn't touch it to go inside to take the test for that one, but it should be the same almost.
Yeah, the
Yeah.
standards of conduct and the intake interview tests are generally very, very similar, right?
Yeah.
Because the, good behavior hasn't changed.
Yeah, the another question I am concerning means the regular, remember the basic or the advanced. It's better for us maybe to take the basic in order we know how the advanced will be, because the basic, if we fail, doesn't matter. Because if you are on the advanced, you have to finish the advanced and pass the advanced. But in the basic will be also resident, non-resident, the foreign, whatever you're explaining right now, or no?
Yeah, so that's one approach, right? So the basic is for resident taxes only, and so is the advanced. Those are both resident taxes. And so yes, you could try the basic first, and that's going to be a smaller amount of material. And if you have trouble with that one, you're going to really have trouble with the advanced. So it would be a good warm up if you're willing to do that.
Okay, but we are going to do with you the test the next week?
That is our plan. But like I say, you don't have to do it. If you don't feel like you're ready, then you should listen to yourself and say, I'm not ready yet. And then you can work to help yourself be prepared so that you can take it.
But in the test will be Form 8843, all of this stuff you just explained, the OI and the Schedule A for non-residents?
Yeah,
be
for the foreign student test, it will
Uh-huh.
have all of the stuff that we've covered up until now. So it'll have who is a
Oh,
resident alien, it'll have the form 8843, it'll have the regular tax forms, it'll have dependents, it'll have all the stuff.
yeah, but that one is for the foreign. It's not inside the advanced.
Yeah.
It's a, oh, okay, okay. All right. Thank you.
All right. Kevin, were you gonna make a comment?
I would recommend taking it as soon as possible afterward. Like definitely study a little bit, but don't put it off for several days. Because if it is like last year, you said they changed it a little bit, but
I don't know.
usually the questions are very similar. So if you take it pretty close to after, you'll probably pass just because you'll recognize the questions. And if you put it off for weeks, you might, not have it.
It'll be like taking it again from the start. Yeah, so Kevin, one of our volunteers from last year, suggested if you have to retake it, take it relatively soon after, like the next day or something like that. Okay. All right. So break. Let's say 7:30. We'll give ourselves an hour to do resident tax stuff. That'll be good. 7:30. All right. We're gonna pause.